The melt-up just went vertical. The Nasdaq jumped more than 3% in a single day, chips leading, the S&P and the Dow at fresh records, all on a peace deal that hasn't even been signed yet. And the money is collapsing into a handful of names. 4 days after the largest public offering in history, SpaceX just bought a coding startup for $60 billion, pressing toward a $3 trillion valuation. The crowd is chasing the concentration. But here's the catch. Most of these giants don't make money. OpenAI lost about $39 billion last year. So where's the edge? In the one company that profits from all of it. Nvidia earned more in a single quarter than OpenAI lost all year. The evidence, not the noise. This is the asymmetric. This is the asymmetric, issue 18, the concentration, tech and crypto investing for thoughtful retail from an operator's lens. The relief rally went vertical and narrow. Artificial intelligence capital is concentrating into a few giant balance sheets, and the edge is owning the one audited profit at the center of it. Here is the one-line read. The relief rally went vertical and narrow, a record chip-led melt-up on an unsigned deal, while artificial intelligence capital concentrates into a handful of mega balance sheets. The companies doing the concentrating mostly don't make money, but the one toll booth, the whole build pays prince profit that dwarfs them. Own the audited profit at the center, not the crowded momentum, into a Federal Reserve nobody has watched run. You'll see the same labels throughout. Confidence, high, medium, or low, consensus versus variant, what the market believes and where we may differ, and on every call, what would change our mind. That's the discipline. Part 1, the macro regime, the melt-up goes vertical, the capital concentrates, and the Federal Reserve resets. The 30-second frame. 1. The relief went vertical, the Nasdaq up more than 3% in a day, records on the S&P and the Dow, oil below $80. 2. The capital is concentrating. SpaceX bought Cursor for $60 billion, 4 days after the largest offering ever. 3. The profit isn't where the spending is. OpenAI lost about $39 billion last year, while Nvidia earned $58 billion in a single quarter. 4. The Federal Reserve is the real event, Warsh's first meeting. And 5. China cracked underneath, with its first consumer spending drop since the pandemic. Start with the tape. On the Iran deal, the Nasdaq jumped 3.07% in a single session to a new high, with the S&P at a record 7,554 and the Dow at a record as well. Chips and artificial intelligence led. But the variant matters. A 3% day led by chips is a concentrated momentum tape, not a broadening one, and the whole rally rests on a deal that signs later this week, not one that has signed. And underneath the euphoria, China's retail sales fell, the first drop since the pandemic reopening. Trade the disinflation, respect the thin leadership. Now the concentration, the week's defining force. SpaceX signed an all-stock deal to buy Anysphere, the maker of the Cursor coding agent, for $60 billion, 4 days after the largest public offering in history, pressing its value toward $3 trillion. That's a 4-day-old public rocket company buying a software firm with paper. And the other side of the concentration is the loss. OpenAI lost about $39 billion in 2025, on spending above $34 billion, ahead of an offering targeting more than $1 trillion. The paper and the losses concentrate into a few balance sheets. The audited profit concentrates into a different, smaller set. In the Federal Reserve, the week's real unpriced event. Kevin Warsh chairs his first meeting on June 16th and 17th. A hold between 3.5% and 3.75% is about 97% priced. But this is a projection meeting, so the new forecasts, the dot plot, and his first press conference are the message, an expected shift from an easing bias toward neutral against inflation at 4.2%. And the Bank of Japan meets into the same window, set to raise to 1%, its highest since 1995, compressing the yen-carry trade under global risk. Part 2, in focus, who profits from the concentration. Our live filings grounded workup landed on Nvidia, the toll booth of the concentration. In the quarter ended April 26th, it earned $58.32 billion in net income, more than 3 times the year-ago quarter. Revenue was $81.6 billion, up 85%, at roughly a 75% gross margin, with operating income above $53 billion. Nvidia earned more profit in this one quarter than OpenAI lost in all of last year. Every accelerator buyer pays the toll booth first, SpaceX's compute, the lab's training runs, every hyperscaler's data center. Now the debate, the bull in the numbers, the profitable toll booth at the center of the concentration, revenue up 85%, net income more than tripled, a 75% gross margin that signals a real software and silicon platform. It monetizes every giant spend, no matter which model or hyperscaler wins, and the loss makers are its customers. The bear in the numbers. It's the most crowded trade on Earth, and its revenue is concentrated in customers who don't make money. If their capital spending digests, the toll booth's traffic falls first. The margin is a peak, not a floor, and the export and policy tail is live. Read a research view, not a call. Nvidia is the cleanest listed expression of who profits from the concentration, profitable, platform-moted, monetizing every balance sheet spend. But it's the most crowded trade in the market. Its revenue is concentrated in money-losing customers, its margin is at a peak, and the policy tail is live into a first-ever Warsh meeting. The structural case is high confidence. The discipline is that the crowding and the entry are the hard part. Own the through-cycle platform power and add on the flush, not the euphoria. The havens and crypto. Gold pushed to about $4,350 an ounce on a weaker dollar as the oil-driven disinflation eased rate hike fears. That it firms as the war premium fades is the tell, the bid is structural. Bitcoin reclaimed about $66,400 and Ether about $1,800 two-week highs on the ceasefire. But on-chain leverage near 38% matches 2021 levels. A fragile bounce. The durable crypto signal stays the plumbing, the regulated rails over the price. And the thematic. Concentration is the cycle's defining force. The spending is concentrating, the labs racing for compute and data. The paper is concentrating, a 4-day-old public company buying a software firm with stock. And the profit is concentrating too, but into a different, smaller set, Nvidia's $58 billion quarter, the toll booth. The edge is to own the profit of the concentration and be wary of the capital being consumed and the rate-sensitive momentum priced for perfection. Part 3, the concentration signal, a framework for reading a record melt-up it hasn't earned into a Federal Reserve meeting it hasn't seen. What we are watching over the next 10 days, Warsh's first meeting and the projections, the Bank of Japan hike into the carry trade, the Iran signing in Switzerland, the SpaceX and Cursor close, Nvidia and the hyperscalers' capital spending, the OpenAI offering against its loss, China's data, oil, crypto leverage, and gold against its structural bid. And we keep score in public. Nvidia enters as the lead concentration profit name, the toll booth of the build. Micron on the sold-out memory, Circle on the settlement rails, Palantir on sovereign artificial intelligence, Talon and EQT on power and fuel, Freeport on copper, gold, constructive, Bitcoin, a liquidity tape. These are dated, falsifiable calls, and we grade them. So where does it land? The relief went vertical and narrow. The capital is concentrating faster than the profit into a Federal Reserve nobody has watched run a meeting, with China cracking underneath. And the asymmetry is the audited profit at the center, Nvidia, more profit in one quarter than OpenAI lost all year, with the catch that it's the most crowded beta with money-losing customers and a live policy tail. The crowd is chasing the concentration. The cash is landing at its center. This is research, not personalized advice. Verify it yourself. We'll see you in the next issue.